bank reconciliation statements. What are we doing? We are reconciling our bank account with the statement that we are receiving from the bank. Now, the easiest way to understand this here is to take note of the following. If this is my bank account in my books, right? And I have a balance here of 10,000 Rand on the debit side. If I compare this to my account, namely ABC Stores, in the books of the bank has a credit balance of 10,000 Rand. What does this mean? It means that in my books, I have a debtor saying that the bank owes me money. How much do they owe me? They owe me 10,000 Rand, therefore on the debit side. But in the books of the bank, look at the perspective, it changes now. Now we're looking at it at this view here. You know the bank, what will the bank say? The bank will say we have a creditor by the name of ABC Traders because they've put their money with us and therefore we're owing them a credit balance of 10,000 Rand. This is the fundamental basic concept of a bank reconciliation statement. And if you understand this concept, then I promise you, bank recon is a piece of cake. You know my favorite? Chocolate cake. Right. Okay. So now, when you are doing a bank reconciliation statement, notice with the new trends in accounting, you're going to find that you have EFTs, right? And once again, what are your EFTs? These are electronic funds transfers. They are almost identical to the writing out of checks. It's just that a physical piece of paper is not written out, but it's an entry that you make whereby you make payments via EFTs, or you can receive payments via EFTs, where the amounts are paid directly from our bank account or the monies are paid out of our bank account. So if an EFT is outstanding, you treat it exactly like an outstanding check, right? And obviously, there are advantages and disadvantages of EFTs, and you should know these. You'll see, I think I've got a question about the advantages, but we'll talk about that just now. Now, very often, you find that a business can have more than one outstanding deposit. Now, if there are outstanding deposits for legitimate reasons, then there's no problem. However, when you find outstanding deposits and you find that they're outstanding for a long time, or they are only processed after 15 or 18 days, then obviously that means that there is something awry, something needs our attention. And therefore, we have to identify the problems relating to outstanding deposit by looking at the dates, guys. Very, very important. When was the deposit reflected in our records? Why was it only reflected in the bank statement at a much later date? Okay? Obviously, you're then going to identify that there's a possible rolling of cash. Now, it sounds very nice, but it's actually fraud. It's theft. Rolling of cash means whoever is doing the deposit is using the money for their personal means, and after a while taking the money and then depositing it into our account. Obviously, that's a crime and it's punishable. It's theft, and it is not. You're not allowed to do that. It's tantamount to fraud. So obviously, when you are analyzing your bank reconciliation statement, you'll have to look at what are the strategies or controls to avoid the recurring of problems. Why is this taking place? You now have to find out what's the problem, and it could be as a lack of division of duties. Remember, division of duties is to ensure that one serves as a check on the other. You could also have rotation of duties, where one person doesn't keep on do the same work every time and gets familiar with it. So you rotate your duties as well. And what's the purpose of division of duties? To ensure that it's part of our internal control processes. And like we alluded to early on, what is internal control? To safeguard the assets of our business.